Halo pemirsa IDX Channel, senang sekali saya KZ7 kembali menemani Anda di Special Dialog. Dan pada kesempatan kali ini kita akan berbincang dengan Managing Director dari A&M Indonesia, Mr. Alessandro Gazzini. Halo Alex, how are you?
Hi KJ, fine.
It's really great to see A&M launch the report. It is called the A&M Distress Alert Report. What is actually the purpose of the report?
Well, you see, we do this report pretty regularly in other economies like EU and US. Basically, for us, is a way to keep a temperature check on the performance of the business community, the business and the companies of a certain market. And since it's never been done before in Indonesia, we had the question about Indonesia. Of course, the story is always about growth, which is great, and there's still much more growth. But we were also curious to understand, well, what about the other side of growth, the companies that are struggling also? What's the situation in Indonesia? So we thought it would be a good thing to do this research.
So actually the report has been quite regularly released for other economies like in the Europe. I saw that for another region, but this is first in Indonesia. And in the report it stated that the Indonesian company, most of it, the publicly traded Indonesia Stock Exchange, also experience is still under distress. Even though Indonesia currently quite seems like in a good shape, even the growth is quite solid, above the 5%. So what is actually, how do you respond to this? Like the economy, but also there's a fact, like you say, the other side of the condition.
So first of all, I think the first key message is actually the big majority of companies of the listcos that we looked at are actually what we would call healthy, right? Okay. So this is 60% and over, right? So then if we look at the 40%, and within the 40%, we have identified companies that we would label as under stress or distress, right? Which means that they have severe problems of balance sheet or debt, repaying debt basically. And as well, they are struggling in terms of optimal operational performance. And that's 14% of the sample of companies we looked at.
Oh, okay, I see. So actually, the healthy proportion is more than half, like 60 by far. Is actually and the 40% is probably unhealthy, we can say. How concerning the 40%? I mean, like, is this quite significant for Indonesia, or probably your helicopter view seeing the other region?
Yeah, the concerning part is again, as of the 40 that I talked about 10 have challenges on operational performance only. About 20 have challenges of a balance sheet only, and about 14 are actually challenged both, right? So the 40% is structured that way. The interesting thing to see is what we note is despite the post-COVID recovery that gave oxygen to many companies and the government support also and so on. Actually, what we see now that the recovery doesn't seem to have been strong enough to push all companies to a healthier situation. So there's a growing amount of companies that are under stress. Okay. Particularly in the last 2 years.
Before we got deeper to what's in the report, actually, I heard that you also directly contributed on the method and producing the report. What is actually the analysis method that being used for this report?
So essentially, the way we look at it is we have about 18 different indicators that we use, and the indicators then are divided about half for balance sheet healthiness. So this is about assets, liabilities, debt, and the ability of companies to repay their obligations. And the other half of the indicators are more about the operational health. So the profitability, the cash balance, also the ability to generate cash for their business.
Okay, so the 40%, back again to what happened the other side in Indonesia. The 40%, what actually what is actually the factors that led those 40% still under distress?
The two big factors, I would say, and then there's many contributing ones. The first one, of course, you saw in the last year and a half, inflation shoot up, and interest rates shot up. So the cost of capital, the cost of debt for the companies has gone up maybe 3-4 times. And this, of course, creates a lot of new cost for the companies because all of a sudden the interest payments that they were paying for their debt has doubled or tripled the cost. So that's number one. Number two is also if you look at the latest World Bank reports and estimates in terms of growth, actually, unfortunately, in the last 3 years, the global growth has gone down year after year. And just very, very recently, the World Bank issued that this year they expect 2.4% growth, which is actually has been the lowest in the last 3 years. So the global demand and growth environment is weakening.
Oh, okay.
So the combination of those two actually, of course, then create additional burden for the company performance.
Okay, I see. We will go deeper about the report and about the inflation also. It's quite interesting. Tetaplah bersama kami pemirsa karena spesial dialog akan segera kembali. Pemirsa IDX Channel, saya masih berbincang dengan Alessandro Gazzini, Managing Director dari A&M Indonesia. Tadi, before the segment we are talking about those factors in Indonesia that happen for that driving those 40% that we've been talking about. Actually, the inflation rate, yes, it is. There's an inflation in Indonesia, probably maybe not that high as in other countries, but probably one of the an interesting thing is the external factors outside Indonesia. One of it is the geopolitical factor, the wars and also oil and gas. How significant the impact of the external factors towards the business in Indonesia?
I think quite significant, of course, because we're in a global community, right? So it's significant for the capital and financial flows. It's also significant for the trade flows.
Okay.
So if Europe is struggling, US is struggling, and especially for Indonesia, very important, if China is also weak, which buys a lot of Indonesia output, especially in the mineral sector, it's very, very significant, right? So we're all interconnected. Okay. And the disturbances, of course, Ukraine war, and now we're hearing, of course, Gaza situation, Middle East, and now that's breaking up supply chain again, Red Sea situation. So trade flows are not facilitated by conflict scenarios, right? Because shipping lanes and shipping costs are all increasing, right? So that's not beneficial also for Indonesia, right?
Okay. So in regards to what sector that most impacted from your report, those 40%, probably it's all included for the high profile company also, but also probably startups also included in the report?
If there are listed companies, they will be included in the report, right? Some of the sectors that we've seen move negatively, right? There's obviously each sector is different, right? For instance, the hard industry sector around steel has been problematic. So all the industrial production related to steel. Infrastructure has also been struggling. This is a common news, right? Especially construction companies or infrastructure companies are in difficulty now in Indonesia as well. But we see the distress also cascading into some other industries. Like for instance, even in retail industry, modern retail or specialty retail, they picked up after COVID. So that was a lot of oxygen for their performance. But they feel the headwinds from the demand side. Consumption is not coming through as strong, right? And people are still ordering online a lot. So the retailers who are still more on a traditional format of brick and mortar, visiting the store situation, also are in difficulty.
Okay, the recovery after the pandemic, and then most of, I think in the report also have not yet back to the pre-pandemic level. Is it even possible to back to those levels before the pandemic, or it's creating something new growth probably, or what is it? Where the goal is, the pre-pandemic, or probably like that. The other ones was people go online, and then the retail, like the retail is not like catching up to it. So I think it's a new normal. There's a new normal, and there's also a target of the pre-pandemic. Is it possible to back to the pre-pandemic?
I think it should be possible. It is necessary. Actually, very recent analysis from the World Bank showed this very precisely. And I think, if I remember correctly, they said the gap has been 8% since pre-pandemic. So what happened is the Indonesian economy recovered well.
Yeah.
So we were growing at 5%, right? Around 5%, which was similar, right? But because of the downfall of the pandemic, there's still an 8% gap in overall GDP that we need to make up. So how do we make it up? The government and the businesses in Indonesia have to imagine that to make up this gap, they have to grow faster.
I see.
So 5% will not be enough to make up the gap.
Okay, I see. And then the next question is regarding the infrastructure sector that you've been mentioned. The President Joko Widodo recently, and his presidency for the last 10 years, been focusing on the infrastructure boom, in his projects. Thus, it's also actually contributing to what happened in the infrastructure sector, the debt, and the problem that it has in the sector.
Well, yes, because but let's take a step back on this, right? First of all, where was Indonesia before, right? And I think it was pretty shared knowledge for the community that Indonesia desperately needed infrastructure.
Agreed.
Anyone living here in Jakarta or outside of Jakarta understands this, right?
Critical.
So the need of infrastructure investment was absolutely urgent for Indonesia.
Okay.
And I have to say, over these years, now we have the Jakarta Bandung, we have all the systems in Jakarta and in the periphery. So a lot of good was done with the infrastructure investment, right? Then what also happens, of course, that for some of this infrastructure investment, specific companies were identified to be the drivers, especially from the BUMN side.
Yeah.
Right? And unfortunately, now what is happening is because they took on debt to fund this infrastructure development, the cash flow from the infrastructure is not coming into their system. So now they're starting to have difficulty to repay their obligations and basically to manage a more healthy balance sheet. So yes, we needed the infrastructure investment, but in some cases, it has also created some challenges for specific companies.
Okay, very interesting. Talking about healthy balance sheet, we'll discuss it more di jeda setelah ini. Pemirsa, tetaplah bersama kami di Special Dialog. Pemirsa IDX Channel, saya masih berbincang dengan Alex. Alex, there was a discussion that we talk about in regards of the speed of recovery. In Indonesia, in the report, it stated that relatively slow. Why? What's the findings from the report?
Yeah, we were also surprised a little bit, right? Because if a company goes into distress, this is it happens. It's physiological. It can happen in the economic system. But what's very important, as you said, is the ability for the company, the creditors, the owners, to quickly restructure this asset, to make it productive again, right? And what we saw is that even in 3 years of time, 40% of the company that were distressed 3 years ago are still in distress now. So almost half, right? So it means that the system, for whatever reasons, like you were saying, we can talk the reasons, isn't able to recycle this distressed company quickly enough. And then we were able to compare with other countries such as UK, right? And the speed of recycling of unhealthy companies to become healthy companies is twice as fast.
Oh.
So twice as fast. Now, why in Indonesia
why?
It be, right? There could be many reasons, we think, right? Number one, there's probably an opportunity to strengthen further the legal framework of bankruptcy and insolvency procedures in the country, right? There is also maybe a cultural element that entrepreneurs, failure still in Asia in particular is always considered a super negative, super negative, and you know there's a lot of pride, a lot of history. I don't want to let go. I have to keep my legacy related to this. I think other economies, mostly Anglo-Saxon countries, it's also culturally accepted that you can fail and restart.
Yeah.
So I think culturally in Indonesia and that influences behaviors and decision making of owners, right? And also maybe from the creditor side, the banking community, perhaps also they are not so inclined to force insolvency onto the companies, right? So a combination of different factors, but the more Indonesia can improve the speed with which it recycles companies that have not become healthy, actually this is very important also for the investor community.
Yes.
Because it's more productive, right? And investors understand that what will happen even if their investment goes bad, right?
Exactly.
And how to recycle it quickly.
Yes.
Otherwise what happens is you start to have this whole group of companies which you can call zombie companies.
Yes.
They're alive, but they're actually not really doing much. They're not investing, they're not hiring, they're not creating new jobs. So that's also not good for the overall economy. Right?
I see. That's quite interesting about how the investors see and also how the organizations see. Can we say that organization transformation in Indonesia is still not that common?
I would say
like the pause and restart.
It happens constantly. We're in constant contact with companies and they do want to do transformation. I would say what is more challenging is when it becomes a very structural, when they need a very deep structural turnaround, that's where it becomes a little bit more challenging. Because often when you have to do these deep structural turnaround, a little bit the owners have to kind of let go or have to accept that some of the decisions that they took in terms of investments and so on didn't go well and cut the branches, right? So deeper turnarounds is still more difficult, I think, in Indonesia.
What are the indicators that from the report can say that this company is a zombie companies in the subgroup?
I think, well, there isn't one indicator. As I said, we use 18 different metrics, right? And we also saw in the report, related to this point, does a company become distressed mostly because of balance sheet problem? Or mostly because the operational performance is bad? So what we saw very clearly is that the biggest driver for distressed company is when there's a balance sheet problem. Because operational performance, you can adjust easier. But your ability to repay your loans, if you took too much loans and your business is not able to generate the profit to pay the loan, this is much more structural. Right? So the indicators that companies need to be very careful about is, of course, the amount of debt, the cost of debt, right? And the ability to produce the cash and the profit to cover the obligation. Right?
There's one also, people say that debt not always negative, but also means growth. But the proportion, how do you respond to this? Some companies probably goes for trying to achieve those growth, but also in the other side, trying to achieve the profit. For the middle term, what is your suggestion?
Traditionally in Indonesia, correctly, I think when the markets are very positive, the economy is very positive, everybody wants grow.
Right.
We want to grow.
Yeah.
And so we take on debt to fund the growth. A new plant, a new product, a new market, and okay. But then when the macro situation becomes more challenging, then we start to discover that some of our plans for growth are more difficult to realize, right? So now I would say, in broadly, given all of these challenges, interest rate, demand, supply chain costs, and so on, companies need to be more prudent, right? So they will need to balance the growth agenda with cash and profitability agenda. It means they have to be more careful when they take on debt. Also because the cost of that debt now is much higher. 2024
is our election year in Indonesia. What can you say for this? I mean, like those distressed company can move from the 40% probably to zero. How do you say the election year? What are the challenges? What should we take note for that?
I think it's a great how do you say, demonstration of democracy. We have an important election year that will set the stage for all the future, right? Yeah. At the same time, historically we've always seen during election year, public sector investment goes down. Investor flow tends to go down because people wait and see, right? So we have to be careful because the economic and global headwinds are already telling us that it's quite challenging. Plus, if everything slows down during an election year, it makes the challenge even bigger, right? So the important thing is that we go through the election well, in a very, orderly manner, and we get a new government as quickly as possible, so that we can restart some of the investment cycles, decisions, and policies, and so on. So the economy can actually get out of the election, let's say, limbo as quickly as possible, right?
Okay, the more certainty we get.
Yeah.
Okay, thank you so much, Alessandro Gazzini, for your time. Itu dia pemirsa, bincang-bincang kami dengan Alex, Managing Director dari A&M Indonesia. Semoga ini menjadi insight baru bagi pemirsa di rumah. Sampai jumpa di spesial dialog selanjutnya.